Yeah, my name is Randy Martinson. I'm with Martinson Ag out of Fargo. Thank you for inviting me to give a little bit of an update on the market side of things. It's been an interesting, to say the least, watching the markets and just how the vegetable oil market in general, how that has taken kind of the lead in the kind of the product side of the oil seeds, whether it be in the soybeans with the soybean oil, whether it be the canola oil. But it's been kind of exciting, and a lot of it is what kind of Barry kind of indicated towards the end of his talking about this renewable diesel, and that's really kind of came on to really help push the demand for vegetable oils and the new uses that we've got for it. But just taking kind of a step back and looking at the vegetable oils in general, we basically have four major vegetable oils that are produced in the world. Soybeans account for about 33% of it. Palm oil accounts for 40%. Canola, about 15%, and sunflowers, 12%. When you look at it on the export side of it, palm oil is by far the largest, coming in at 63%. Sunflowers and soybeans at 15%, and then canola at 7%. What's interesting is that we've kind of seen a more dynamic, or a little bit more of a push in the bean oil side and the canola side, and to some degree it's smaller as the sunflowers, because of a lack of production, dry conditions. The palm oil production has been quite low the last few years, and that's really brought a little bit more of a uh, uh, demand, or a little bit more interest into some of these other vegetable oils, primarily into the canola and into the soybean. Now, throw into that you have a little bit of production problem in the northern plains with canola production, with the U.S. having a little lower production, as well as Canada. That really did then help spike this market and really get things charged up, as now you're looking at your major products, just about every single one of them, except soybeans, seeing a production problem for the 2021 year. Palm oils, like I said, the most widely used, 84% of the palm oil production comes out of Indonesia and Malaysia. On average, they've been seeing a production growth of about 3% a year, but demand has been growing by about 4%. So you can see that it's not keeping up, and that has also brought in a little more extra demand towards the other products. Now, for years, soybean oil was the byproduct, or bean, the vegetable oil was a byproduct. It wasn't as as the demand wasn't as great, because of the meal was the market that everybody wanted. We needed the protein to feed to the animals, and that was the primary focus of a lot of the vegetable oil products, or the bio, or the soybeans and the canola and the sunflowers. Well, now all of a sudden, because of the change in some diets across the world, we've seen human consumption increase quite a bit for the vegetable oils, and we're now starting to see it as far as the industrial side with the renewable diesel and some of these other uses. So now all of a sudden, we're starting to see a lot bigger demand base, and oil, the vegetable oil, is becoming a lot bigger attraction, you might say. Like I said, palm oil is the largest, but it's seeing tremendous shortfalls in production in Malaysia, and that's certainly helping to push things as far as the U.S. is concerned, with our canola and our sunflowers, and even the soybeans. Drought caused, as I mentioned, big concerns as far as U.S. and Canada. Record production did come into play for Australia. We did see increased production in the EU, Russia, and the Ukraine. Of course, now we're seeing some other issues with Russia and the Ukraine that's causing a little bit of disruption as far as the potential for some exports out of those countries. It'll be interesting to see how things play out here in the next couple of days, or in the next week. Supposedly, that's one of the things that's hitting the market hard today, is the fact that Russia is starting to pull back troops off of the Ukraine border, and we're seeing a little bit more of a de-escalation. We'll see if that continues to follow through here for the rest of the week. The decline in production in Canada was large, though, and that, even with the increase that we saw in Australia, EU, and Russia, and the Ukraine, that decrease in Canada was a little bit too much to overcome from these other countries, since Canada is such a huge producer. Now, the expectation is that when we go into 22, we're going to see bigger increases in acreage, especially in the U.S., the northern parts of North Dakota. We would expect, because of some solid guarantees with the crop insurance side, And because of good proven yields, we will see an increase in acres in the northern regions of North Dakota. Canada is very likely going to increase their acreage for canola. So we're kind of looking at this market maybe stumbling a little bit once we get into the beginning of 2022. I've been kind of telling producers that we've got some good prices, take advantage of doing some marketing, don't get too aggressive. But by the time we get in and we start seeing where the 22 acres could possibly fall, then we want to get to become a little more aggressive and have a majority of our canola booked or sold, just because of the idea that we're going to see such an increase in acres. Now, like I mentioned, the big growth in what Barry was kind of talking about is in the biofuels. And we're going to start kind of getting back into the debate like we had with corn back in 2008. And that is, are we going to raise it for food or are we going to raise it for fuel? And that's going to be kind of the big debate that starts to take place here. And it already is in some areas. Now, this renewable diesel, it's got a chance to really take off and be big. It's going to take a while. It's a little more expensive to refine and to make, but because of it's a little bit cleaner for burning, it's going to start gaining traction in a lot of the states that are needed to change their carbon footprint a little bit. And it's very likely we're going to continue to see this grow and get to become a little bit more serious. And it's going to take a lot of the vegetable oil product that we have in production right now. I know I did a presentation with Dr. Olson, Frayne Olson, and one of the things that he's studied, he's done, and that they came up with is that if we took every soybean that's raised in the United States, we crushed them all, took that soybean oil and made diesel fuel into it, it would only supply California with their needs. So this side of the industry has a tremendous growth potential. It's going to be slow in development and slow in adaptation, but it is certainly something that has a potential for this market or for the demand source to grow large for the vegetable oils. And government is throwing a lot of money at this, the biofuels research and looking at developing this. And you can see that it's more on the renewable diesel fuel side, which that can take any major vegetable oil or any animal fats, kind of like what Barry was mentioning. But it is going to be kind of the drive that is going to help continue to push the vegetable oil markets, the canola and the sunflowers and the soybeans higher here, or at least hold the markets up a little bit. And then the other part would be what happens if we can even get into this is the aviation fuel, and that would be another market that could really see some pretty help see some explosive growth in demand for the vegetable oil markets. And when you look at it, this is palm oil, monthly Malaysian palm oil, and you can see the black line kind of shows where our production's been at so far this year. And you can see it kind of shows quite a bit of range, but we are quite a bit lower than most years. A little bit ahead of the 2021 right now, but we are seeing a little bit of a downturn in production, and that doesn't look like that's going to change anytime in the short term. When you look at vegetable oil stocks to use, for the last 3 years, we continue to see it decline. That is a good sign. I mean, it says that the demand is there. Production's been a little bit tight, but we are still seeing the demand growth, which is pulling down our stocks in a big picture. So we are seeing increased demand. Now, when you look at it as far as world production, the number to really pay attention to is here is our stocks, and you can see that just like we're seeing with our stocks to use ratio decreasing, our stocks as far as total stocks in the world is concerned has been also decreasing over the last 3 to 4 years. So we are going the right direction. That does show that we do need to increase acres to help kind of stabilize our supply a little bit. You can even see of the last couple of years that overall, since 17, we've kind of seen a little bit of a downturn as far as production. The blue line kind of is the production side. So that's a little positive as well, as we're seeing strong demand and decreasing stocks. And you can kind of see what's interesting here is where domestic consumption has been seeing a pretty good increase. The last year, we did see a little decrease, and that's mainly because of the price jump, because of tighter supplies. And our biggest one, of course, the biggest demand source in the canola market is the domestic consumption. exports also seeing a little bit of a downturn here as well, but that's mainly again because tighter supplies that we've been seeing. And when you look at it for production, as I mentioned, you know, here's the production side. You can see that the blue line here is Canada, how much their production dropped this last year because of drought. Seeing a little bit of an increase in the EU, a little bit of an increase as far as Australia is concerned, but really the big change came when we saw the fact that Canada had their lower production. And that to me is going to help bring out a large increase in acres, which could make this year 2022 year kind of interesting as far as the market is concerned. Now, when you look at it, as far as some of the crops that are out there, canola production just in the US, we did see about a 21% decrease from the previous year for the US. Sunflower production was down 36%. Even flax was down 52.5%. These numbers coming from the January report from USDA. Now, when you look at the canola market, we're right up against where we've been trading at as far as, you know, the contract highs or close to contract highs. I think this is a market that's going to continue to be up in this area here for at least, I would say another, at least through March until we start to see where the acres are going to fall into play. The March contract, you know, for old crop is certainly holding some pretty good premiums over what we've seen over the last few years, and certainly some good sellable levels. I would be a little cautious to price quite yet, just because I do think that we could see another push in this market. As far as new crop, again, we're right up against the contract highs, getting close to that 850 per metric ton. This is, of course, in the canola Winnipeg exchange. So we're seeing, again, some pretty strong levels. We're down a little bit now in the market today, but again, I think by the time we get into March, April, we're going to see some pretty strong numbers to try to buy or hold on to the acres. Every one of the crops up in the Northern Plains, and that's one of the interesting things, every crop in the Northern Plains has to buy acres, whether it's the barley, whether it's canola, whether it's sunflowers, because of a short production last year. So they're all going to be trying to chase after the acre that's out there, and that's going to hold prices fairly strong until we can get into the field and actually start seeing a little bit of planting take place. Then we can start to see a little bit of issue. I'm not so worried about the fertilizer increase cost. I think the canola market will be able to make up for that difference, a little bit higher input cost. The bigger question is going to be on the chemical side and whether or not we can get the chemicals we need. But overall, I do think that the inputs will kind of take a secondary play as far as the market price will kind of lead and dictate what happens, especially with the strong guarantees that we could possibly see as we go into the spring here. So when you look at the weekly chart, again, just like we're seeing on the daily charts, the weekly charts are still right up against the highs that we've seen. And you can see what I wanted to show with this chart is just how much above the averages that we are. And this is actually a 5-year chart. So you can see that we're way up in the upper end of the range as well. 1,000 basically is the highs that we broke above that we've never seen before. So we are certainly in uncharted territories as far as canola prices are concerned, and certainly ones that are viable to continue to take a look at as far as pricing. So the one question that's going to kind of linger here is the drought, just how far or how wide that's going to go yet this spring. Right now, we are looking at the potential to see a little bit. The weather forecasts that I pay attention to are calling for maybe a tough planting season. But once we get past that, we're looking at seeing a warm, drier season, just like we saw last year. I don't think, I mean, right now, it doesn't look like that should impact the major canola producing areas. Primarily what we're looking at is a little bit wetter, cooler, and as far as the southeast corner is concerned. So it shouldn't cause a trouble as far as getting most of the canola planted this spring. But it does look like we could see a little bit drier and a little bit warmer season during the growing season, and that could cause a little bit of production issues. So there's that's the kind of the key to look forward to as we kind of go through the growing season. And when you look at it as far as the little bit more deeper soil, the Palmer Drought Index shows that the western part of North Dakota is still a little bit in the dry area. And we still are looking at, as far as the southeast corner, and most of that area is still a little bit on the wet side, but it's still that west central part of the North Dakota that is a little bit on the questionable side as far as potential for production, as well as Montana. So that's going to be the key areas to keep an eye on as far as production is concerned for this growing season. So that's kind of what I had. It's kind of quick synopsis of it. Canola's got some possibilities or some opportunities this year for producers to take advantage of, and it looks like a very strong market and one that isn't going to quite give up its premium very easily.